Good evening. It's the Wall Street Weekly Wrap Up, April 11th, 2025. And I'm your host, John Newquist. And it was another exciting week, this time to the green. So let's talk about it. Plus, I'm going to go over what I call asset allocation because nobody talks about it. And if they talk about it, it really isn't what they do. And that's important because, we have to think about what we're using our money for and what's our goal to get to. And I don't think, I never hear it. I watch thousands of hours of business TV and nobody talks about it. So I'm going to talk about it because, part of the lessons I learned at Merrill Lynch, you want income no matter what the climate is. And you want to own real estate, one of our 3 lessons from the Depression. So let's get into the show and take a look at it. We had a good week. So overall, we're still down. Again, we were up 2.15 today. We're going to get dyslexic. 162 million Americans invested in markets. So figure the adult market is like 180, 200. There's a lot of people. No, there's 340 million Americans. Remember, the kids aren't in it probably. But there's a lot of people in it, and Monday morning, like I said, everybody watches a lot of stuff. Some people don't watch it at all, but a lot of people watch the market. I watch the market every day. I'm reading it every day. I watch it every day because that's what I like to do for the last eons upon eons. Like I said, we'll go over the best days in Nasdaq. I'll show you when I really started tracking this stuff. A long time ago. The portfolio, 12.7% for the overall. Then we had the gain, so we're going to be minus 10. Getting better. Remember, we were a little bit minus 17. Where does it compare to? Well, we're better than Nasdaq. We're better than S&P 5 VidCap. Still, our benchmark is to beat the S&P 500. Now, let's take a look at the best days in the Nasdaq. The 9th. 2 days ago, up 12.3. Trump backed off the tariffs. I called, he blinked. The market was into 20% down. It was in bear market territory. And of course, he tweets a good time to buy the market. Nobody really paid attention to it. But some people are, conspiracies that, everybody did it. There's now Congress asking to see who is buying all these call options on the market. You think about it, he's going to back off. There's going to be a lot of money to make and go right to the option market and make somebody said, they turned $100,000 to 21 million. Well, that's what happens if you would know that up there in advance and you're not dumping, 100 million to make 2 billion. But, there's somebody that kind of knew and then gave a call to somebody. When we look at it, like I said, the best days also, Greenspan dropped rates 50 basis points, and that would be normally scare me, but in 2001 it jumped up the market. And one of the things I try to tell people, we're preparing for the recession because, as we get into January 2000, this is the April collapse. We dropped 25% on the Nasdaq that week. And of course, you get a rebound, and then it comes back down in 2001. You're down 40% in 2000, and another 40% in 2002. So some of the big stock pickers that that was hot back then, Kevin and Steve and all these other ones, lost 40% each year for 3 years. And then, of course, the housing collapse. Morgan Stanley gets 9B infusion. Banks get cash liquidity. It's called the crash bounce. It might not collapse the whole economy. That's what people were doing. And then Greenspan, crude was dropping below 30. Wow, we had that before. And then, and they said the positive electric outcome. So kind of interesting. And we'll talk about what Jamie Dimon said about it because it's, I always listen to Jamie and he's pretty good. And they had earnings, and I didn't get to read the earnings report, but can't do everything in one day. And the indicators, like I said, interest rates, not bad, still below 4, but up 28 basis points. Woo! That's smoking. We'll talk about the 10-year a little bit later and how it affects. Right now, the mortgage is high with interest rates low from the Fed, and that's not there. I mean, we're up, 75 basis points from the cuts, and we should be down 75 basis points. But no, oil, boy, I tell you what, we'll talk a little bit about oil, but I mean, it's down there, $60. It dipped below 60, and they're making money, but not as much. And again, these oil companies are not interested in spending money when the oil price is this low. It's just take the money, bank it, buy back dividends, all these fun things, pay more dividends. Natural gas, 350, and this season's going to die. So we'll see this below $3 during the summer. And a gold, bing, 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 record high. Boom, boom, boom. It was like all green. Boom, boom, boom. It's up at a record high. So people always ask me, is it a good time to buy gold? Well, no, a good time to buy gold was when it was at 1,700 when we were buying it. But, I tell people, you got to have gold in your portfolio, and you'll just, even if you just buy a little and nibble on it. I like physical gold. Just stick it in a safety deposit box, pay the fee, and it's just there. Because in the Depression, precious metals survived inflation, paid for things, and it might be just something you might have to do. Silver, over 30, that's good. Remember, it's not as high as it was. Remember, we have Hunt Brothers tried to capture it in the 80s at $50, so, 4 times that, it'd be 200. So I always look at silver. Yeah, it's high, but gold is high. And then copper, 450. That's our magic number. We like to get that. That means economies are going good across the world, and it's not so bad. So I'm going to talk about asset allocation. There's people who put so much bonds, so much stocks. Hi, this is John Newquist from Merrill Lynch. I have a 7.65% bond fund. So you're getting 7.65. That's all I did. Sell the bonds, and it's all. This is simplistic. And I just sat there and I try to tell people. I grew up with the 110 rule. Take your age minus 110. So if you were 30 years old, you're going to put 80% of your money in stocks. And then, you're 50, you're going to be 60% invested. I call it the 110 plus because I like to see the money go into paying off your house. Dave Ramsey always talks about the best status in the world is a paid off house, and he's not wrong. I mean, it's hard. You can't get a house right now, but there will be a time. There will always be a time you can get a house. The interest rates will not be forever high. I mean, I go back, to when I bought a house eons ago at 10.9%. Whew, that was high, and that was lower than it was 10 years ago. So as you take your money and you start to pay off your mortgage, eventually you will pay off your mortgage, and real estate is 62% of all the assets. That's what it should be. Now, they don't talk about it. They don't talk about this rule. But if you don't have a house, you don't have this big chunk of money. You're going from apartment to apartment to apartment. That's why I tell people, you really have to try to get to it, because this is kind of like you putting money in the bank. It's cash. You can sell it. It's not going to happen right away. But I always found out, because I've sold houses and stuff, you sell houses at a price that's, low for the market, like 5%, 10% lower, people are going to grab it. They will grab it because people always need houses. So it's this portion. Now, of course, why is this so big? Well, because my town has jumped the price of the house 30% for the last 2 years. It was like up 5%, 6%. No big deal, kind of like a little bit above inflation. And then it's hot. And people, there's a number where I will say, if this gets to be about, we're at 63%. If this gets to 80, I'm selling the house. I'm going to move because it's way too high. It's too much. I mean, you got to look at it. It's like, a parabolic stock market. If the housing market goes the same thing in your city, you got to think about, take the money, go get somewhere a little bit cheaper, because there's always somewhere a little bit cheaper, and then, take this chunk and start it over. But that's it. And what's next? We got the bonds, annuity bonds. Remember, like I said, if you can get a chance to put money away and get an annuity out of it, bonds paying 7.6%, you can do this. And that's a big chunk. So people are saying, wait a minute. If you're this old, like 60, 50% or whatever number it is, you're up at 80%. You've got a lot of stagnant cash. And you can look at it that way, but you want to get older and have more things. Now, the stock market, again, when I was younger, it was a big percentage of the portfolio. Now, it's about 12%. It's an important 12%. I watch it like a hawk, but it's the real estate and the bonds that make it, because as you get older, you want to have less risk. You can't be 64 years old like some of my friends that were, that went through the 2008 crash where $400,000 became $100,000. And now you can't even retire. You can't. What are you going to do with $100,000? Well, how much is that? If you're making, just say around number 50, that's 2 years of income. You can't retire. You had to work until you can get it so much up there. So that's why I tell people. And gold, it's done well. It's done quite well, but it's a small percentage. It'd like to be bigger. We add to it. In relationship to the stocks, it's going to be at least 5%, probably now like 7%. And then crypto's a small percentage, like 2.5, 3% compared to the stocks. So, one of the things that we look at is we're going to get a return. We want to beat the S&P 500, but we don't consider all this. And people said, you did 30% on the house, 30% on the house. That's a lot of money. Yeah, it is. But I've been around real estate for a long time. There's days where it went down, during the housing collapse. I mean, this was down to 30%. So I tell people, you want to have it, you want to start doing, because if you think you're 30 years old, you get to 60, maybe you could, have a house that's almost paid for. You cannot be 72 and say, I don't have a house. I have only this little small fraction paid for and the rest of it's all debt. That means you're going to work a long time. I mean, I just talk about it because nobody talks about it. I always see this thing here, so much bonds, so much stocks. Of course, they don't talk about precious metals. They don't talk about other physical assets, whether it be hobby stuff or whatever. But, it's a big deal. And I think a lot of times you got to start thinking, if you don't look at it when you're 30, 40 years old, what are you going to do when you're 65? You can't be like some of my friends. Well, I get $1,200 a month for Social Security. I don't have any cash. I don't have any house. I don't have any stocks. You're just getting 12. What are you going to do? Nothing. You got to hope somebody will let you live in the basement. I don't want to be blunt, but I mean, where are you going to get? There are places I know in Illinois you can get an apartment for $400 a month and gives you $800 a month to live. Heaven forbid you have a medical bill. This is planning. And if you don't want to plan, then the fates will decide how rough your life will be when you go through it. And I'm more conscious of that. I don't want to run out of money in retirement like my dad. We got to kick him out of the one nursing home because the price has gone up and the retirement and IRA's done now, and all you got is Social Security. And it's like, wow, this is a lot of stuff. So it's hard, but you got to plan early. And like I said, nobody's really talking about what you should do and where you want to get to. You want to, this is high. If it was 50%, that would be fine. If it was 40%, that would be fine. But I want to say, like I said, if you hit 60, 50% of your assets would be, if you did the 1 in 10 rule, would be in stocks and bonds, or stocks, and then the rest of it, the other 40%. And if you got 40% of annuity and real estate, that's not so bad, because hopefully you'll live, to your 80s, but you just got to plan for it. Otherwise, that's not good, So, like I said, I am not eligible for Social Security, so this will go up when I hit the magic, age, and then I get that, and that's going to be a bigger percentage. Stocks will be smaller, and I'll start putting, I don't need to put it more in real estate. I'll be putting it more back into stocks. But it's an important rule, but you're not going to see anybody talk about it. All these financial talking heads, they're absolutely horrible for people. You're not really dealing with how you can make it. You go look at all these people from New York and everything, moving to Arizona, moving to Florida, Texas. They take their house, they sell it, and now they downsize, and that's where they can live. You don't have that in the cash. You have it in the house, and the house becomes cash when you sell it. And that's, you got to think a little bit more, and I says, I don't want to be in a situation where if this wipes out to zero, I still got these. I don't want to see this go to zero, but we are preparing for a recession. 10-year bond yield goes up, and what does that mean? Guess what? You're not going to buy a house. I mean, it's tough enough as it is, and if it keeps on going up, which it should not do, they're not going to do it. And the bond market is I want to say, the control for the policies of the administrations and Congress, because they got to sell to borrow, to finance the debt. And if they think the dollar's getting weaker and not as good, your policies are going to mean this is going to be higher and higher to offer people to buy them. You know, if everything is great, economy's good, they think that they're not going to give you much because everybody wants the bonds. So I watched the 10-year. I really just watched the 2-year a lot, but the 10-year, you know, I like this chart. The guy did a good job on the chart. So oil again, you know, it's down at 61. I mean, you were at 80. Look at this, 85. People were talking it's going to 100. I watched these professionals say it's going to go 100. I says no, not going to. You know, China wasn't getting started. You know, you can talk about it, but they're pulling billions upon billions trying to stimulate the economy, and it's just having a trouble. So all this tariff stuff's not helping China at all, and maybe that's the point. But, you know, $60, nobody's going to drill. So drill, baby, drill, it's over. And if they keep on pushing this hard and it gets down to 55, they'll make money. Don't get me wrong, but they ain't going to be drilling. They're going to be out there buying back shares, try to increase the share over there, give more dividends, things like that. You know, I mean, the oil companies are not going to invest a lot of money when they don't know what will be in 2028. And that's just, you know, reality. JP Morgan, Jamie talked about the 7 of the best days in the market occur within 15 days of the worst days. Well, we had the worst day last week. We had one of the worst days in the area. So, you know, when you get a top 5 and then we followed up with a top 20 worst day, I always say there's 3 worst days when we have 2 of them already. They'll get a third one. And we'll get one more good day over 5% on the Nasdaq. So, you know, this is just you know, this is what people get. If waterfall drops, sooner or later you get sick and you bail. Unlike me, I'm not going to bail. I mean, you know, it's important. Then we get a little bounce back. We're excited. We buy, and then it just collapses. It just utterly collapses. And that's when people just said, "Get me out." That's why Larry Fink of BlackRock, like almost billions upon billions went into money market because they've taken the pain. They're starting to look at what's left, and I can't afford to lose that. I will stay, and that's the problem. You're in too much stocks, not enough safety, and that's, you know, like I said, people say, well, it wasn't like 2000. Well, 2001 is COVID, pop, go right back up. Could be the recession, and it could be a long 3-year ugliness from 2000 to 2002. So we don't know. You know, this randomness, this, you know, one of the things we'll talk about the Trump put, which I hate that word. I really despise that word, but we'll talk about that. And let's go to Taiwan Semiconductor, 46%. This is going up every single quarter since AI is hit. This company is one of our 3 kings: Taiwan, ARM, and NVIDIA. You're not going to sell those stocks. These will be the last 3 stocks I sell. Because unless I see a halt in spending, which people float, oh yeah, it's doing. I just listened to Jensen Huang. We're sold out for this year. Sold out. Not like slowing orders. What does that mean? You're sold out. You know, it's like maybe 2026 could be different, but this year's going to be good. And we'll talk about it. Let's talk about the AI moment. November 2023, ChatGPT, large language model, it stunned the world. Everybody wanted it. The NVIDIA chip, the Grace Hopper, was so much gold. They couldn't get him, couldn't find him fast enough. Just incredible demand. He's killing it on the thing, and that's why NVIDIA went up to $3 trillion. Now we got the Blackwell chip. A lot of companies have them now. Everybody's waiting for the aha moment. What will it be? Well, we kind of have text to video, but it could happen. Do we have, Alexa, Siri, being able to talk to you like a real person? Not yet. It's getting there. I've watched other simulations. I watched today at the medical thing where the transcription was perfect. The guy's talking, and it just transcribes everything, summarizes the notes, puts in the key points. That's pretty amazing. I says, I want to buy it. He says, no, it's proprietary for our hospital. I'm like, wow. It's for now, it's at your hospital, but somebody will make a free version or a paid version. Because I said I'd buy it instantly, because I do translation. I do a lot of it, and the software's good, but this was the best. So, are we getting any? I think text to video. You're going to get people writing comic books, movies, from what they speak, and they're going to say, no, make the person a little lighter, make the person a little taller, all these things. I want the sword fight to come from the left, stab him in the arm, that kind of stuff. It's going to be incredible, and this is what we're going to look for. Go over there and say, okay, Alexa, go out and take the trash in the kitchen out. The little robot, take it out, put it in the trash, By the way, I need the floor cleaned, and it will clean the floor. It'll be all this stuff. I was showing people, like in the safety side, here I am working on confined space, get in the advanced chat DBP, it's telling me all these other hazards that see it in the photo, and I'm like, okay, I'm good. But I was focused on one thing, and this is picking up everything. And that's going to change the world when they start saying, hey, I got the robot and it does better than you. You got a lot of anxious safety people who are like, okay, saying this thing could replace me. As one of my friends said, if the robot can do my job, what's my job going to be? Good question. There's going to be someone need to be doing it, but if you don't have any skills, you're not going to put a person off the street to maintain a $50,000 robot. You'd have to be trained. And so I don't want to say the future could be bleak, but it could be bleak for a lot of the people that are no skills. And I tell people, I was listening to Fink, we need something like 800,000 electricians. That's a skilled trade. It's not just college. You got trades that are skilled. Welding, electrical, plumbing, any of these things are good. You know how to sew, you know how to do amazing art. Those are skills. And that's what I said. Find your niche that you like to do. Google's Alphabet Waymo was worth so much money. I watched Kramer sell out of Google. He finally took the pain and got out. No. Google's leading in a lot of areas, and I mean, I give it number 2 after ChatGPT for the advanced Gemini. And Waymo, 20% of Uber rides in Austin. They are killing Elon with that. How would you like to be in Texas and you ain't even number 1? This is autonomous driving doing work for Uber. Now, normally we'd buy Uber, but again, we had to cut the tech exposure down for the recession because, remember, when they start getting ugly, they're going to sell Google, they're going to sell a little Microsoft, and, the earnings. We're going to watch the earnings. We should be able to be double digits in tech, but when it gets really ugly, it could be high single digits, and maybe if that's still the best, then we'll stick with it. But, I mean, I watched Kramer, and he's talking about selling Apple, too, and we'll talk about Apple. The trade tensions, I had to make my own. I took this chart. I thought it was pretty good. This is, the election here and the inauguration, and there's a 10%, then a 10%. Chinese retaliate 34. He goes up to 34. Then it's 50, 50. And now it's up to 125% for the Chinese. Trump is at 145. Only China. Everybody else is at 10%. And 10% may not stay, may stay. As we said, once you blinked on TikTok, once you blinked on these other tariffs, they know you can blink one more time. And this is where, like I said, if you're a congressman and you're watching the economy tank, you're hearing from it. You see things like Social Security might get cut, you're going to hear from it. So there's a lot of things in there, but the tension is in there, and I wish we could do it differently. I mean, I don't think you have to come in there like a sledgehammer and hit it. I think you can negotiate and just do things that are fair, and if they don't want to do it, then you go up higher. But no, it's like two bulls running into each other. China's not going to back off. If I know anything about China for 40 years, it's not going to back off. They're not going to come in big, and that's what I think they thought they were going to do. Everybody else is going to come running. No, Chinese are not like that. They've been preparing for this moment to be self-autonomous from the United States. We haven't been prepared. We're not ready for it. So Apple, one of the things that people talk about, well, the Apple made in Taiwan. No, it isn't. Foxconn is made by 900,000 employees at Foxconn. 1 million employees almost. They're putting the iPhones, they're putting other phones together. You may get some source material from Taiwan, but guess what? They're putting it in there, and that's a lot of their revenue. They flew jumbo jets to get whatever they could get out of Taiwan because they're so scared of these tariffs. But that's not a 2-year supply. It's more like maybe a 2-month supply if it's a hot market. If it's low market, maybe 6 months supply. Well, just 140, let's say just 100% tariff. Just say we get settled at 100. You're going to pay $2,800, $3,000 for an iPhone? No way. You go buy Samsung. It'll kill the iPhone because you can't afford to do it. Well, yeah, they built in China. Oh, bad Apple, but we're looking at, this is a $3 trillion company. How much are you going to punish it? You're going to make them go all the way down to 500 million? The Apple investor is going to lose, 70, 80, 90% of their money? Woo! You want to do that, that's a hell of a thing. That's why I said there's going to be a blink on it. And that's where I think the Chinese are going to, because you got Starbucks, you got Nike, you got Apple, where are you going to sit there and do it? We're not going to build the iPhone here. We don't even have a Foxconn over here to do it. This is like if you had it in place, then we can say we just moved it from China to the United States. It is not in place. So this is part of this whole strategy, and it's going to be an issue that I think is going to be pretty ugly. And that's why we've not been in Apple. We watched the revenues, and I just think it's going to be a tough summer for Apple. Now, people are asking, okay, let's say, Alexa, what is the Apple stock price?
When the market closed, Apple traded at $198
$198.
15 cents on the Nasdaq, up 4.1% since previous close.
So we were up at 260, and it's you see here it is 198. It's right on my chart, but I have to squint to see it. Where would I buy it? I would think I think 125 could be a number. If you want to say, they're pushing stuff to India, but India is just starting out. They got out a few years ago into India. They'd like to make it in Vietnam, but you're not going to make a Foxconn in Vietnam right away. The talent isn't there. The machines aren't there. This is like a 5-year project, so it could be a lot of pain. Now, Cook is one of the smartest businessmen that run the companies, but there's going to be a blink. They have to. They cannot do it, and I think the Chinese are just waiting for the blink, because you're going to have to exempt the iPhone. And oh no, we already know you blinked twice. You're the boy that cried wolf. Nobody the third time is going to believe it. Everybody's like, yeah, whatever you say doesn't matter anymore. You blinked twice, and you can say, well, that was the art of the deal. No. You blinked twice. You talked tough, you acted tough, but you backed down. End result is what actually happened. And that is the big deal. So there's a number. I don't know how much it's going to go down. I mean, like I said, if Kramer gets out, that's when I probably think about buying, but we'll see. I mean, buy Apple, not trade it, So the Trump put, I hate that term. I just, they get fascinated. It was a term out there, the turn of the Trump put, but essentially I watched it. When the bear market triggered on the S&P 500 intraday, that's when it came off. And if you want to blame Peter Navarro for the stupidest tariff formulas that you might have saw, like, Vietnam is going to spend $400 billion of their capital to buy $200 million of American product. Like, what planet are you on? It's like, it was just stupid, and sounds great. He talks great, but no way. That I call it the Navarro experiment is over. It's not coming back. It might be one country they might try to do it, but that's it. So, like I said, he's trying to play the tough negotiator, which could be there because he's got all these 10%ers, and but it's a mess right now. And of course, no president wants to have the equities collapse. You elect that woman, you're going to get the Great Recession. Now we're getting 20% down. There's going to be people like, hey, I'm in it. I've lost hundreds. I mean, I have people sitting there showing me their things. John, I put $3,000 a month at age such and such, and I lost $50,000 this year. $50,000. I lost 2 years putting in my market because of this stuff. This is what people are faced with and stuff. And so interest rates are high. I think they're high. You can't buy a house. and the house prices are high, so that makes it double. Inflation's lower. That's good. There's 2.4% annual inflation, but everybody says it's going higher. I says, you know what? This thing is in new territory. We got this tariff nonsense. We don't know what's going to happen. My prediction is a recession type of thing, and the prices are higher. You go to Jewel, can of soup's $4. It was only $1 on sale, $2 normally. Now it's $4. It's United States soup, and so we're seeing a lot of stuff, and you look at it, and heaven forbid you want to eat a steak, because that's going to be premium price, double what it was 2 years ago. So there's a lot of people cutting back, as Walmart says, as Dollar General said. That's why we're defensive. Polkadot, we just picked the crypto that we own. You can see, you buy low, that's now. You buy high, you went from 10 to $4, and there goes 60% of your money. These guys are getting wiped out on crypto because all this stuff, it's going to go up 57% down. So people are like, when's it going to go up? I says, well, I think it'll go up. It is kind of like a digital gold. You can use it, you can sell it, you can do a lot of things with it faster than you could do with gold. So, but it's tremendous volatility. Again, the election right around here shoots up, comes back down, all the gains are gone, and even worse, we're down here. It's May 2024. We're worse than it was a year ago, anytime in the last year. So I just tell people, you want to buy, now it's not a bad time just to nibble at it. Just put some in it. Don't have to. I tell some of the people I know, if you just put $5-10 in it, it'll be all right, because it'll eventually come back. Crypto has just got its own little life, and it's going to do things it wants to do, and and it's a lot of excitement. I forgot how much Larry Fink liquidated in Bitcoin. I mean, a lot of ETF getting out of it because people are like, I got to get out of this stuff. I got to have real cash and sit on the sides with my bonds paying 2 years 4%. The earnings came out. Just the timing of this whole thing, because we go in our 12 suckers right in there. We always compare. I'm loving the color coding. Generally, if it's kind of flat, Berkshire Hathaway went up a little bit. Blue is good. Schwab went up, over 5%. Coinbase is just insane, but we'll see how it goes when people have liquidated and not trading so much. AIG, surprising that was up there. The XLF, which is a financial, this is all financials, peaked up over here in March, and then it dropped like a rock, bounced, dropped like a rock. So, it's tough. Jamie Dimon said, considerable economic turbulence, including geopolitics, i.e. the, tariffs and the war and everything else. But let's just take a look at it. We got JP Morgan. It went down a little bit to 8%. Morgan Stanley down a little bit more to 7%. BlackRock, boy, a big 5% plus drop on their revenues and stuff. And that's what we watch. And we're like that close to buying BlackRock, but we waited and want to see one more earnings and all this nonsense, and they're taking a hit. And they missed, the assets under management dropped. So that's a big deal. And of course, Schwab did well because everybody's trading, moving stuff. And then SOFI was great. Now it's a big drop, still not double digits. So, we'll see. And these should get a little bit lower, should be all pink and red, next quarter, because nobody knows what's happening. And again, AIG went up 8%, and I didn't dig into why, but that's, they should have been like Chubb at a little bit about, a little bit single digits and stuff. I don't know if 8 is different. Aon's still high, even though it's dropped a little bit more. So there's a lot of good stuff. BA, Bank of America, 15%, that's good. Visa, 10%. MasterCard, 14%. Where's our Citibank, 12%. So, the banks are doing pretty good. If you look at it, like JP Morgan did the worst, but I've been with JP Morgan a long time. I'm going to be sticking with JP Morgan because I agree with them. Once we get a new Jamie Dimon successors this year, next year, whatever year, then we'll watch that performance, and then that could be our time we get out. Let's take a look at the individual charts. JP Morgan, just like all the banks, I call it the Z pattern, kind of like here's our Z coming back down. Somebody says, well, it's like an inverted M. Well, whatever you want to call it. All similar. Beat by 44 cents. Revenues rose 8%. So remember, largest bank with assets under management. That's not bad. Morgan Stanley Wealth Advisement, that's a good thing, 17%. Remember, they're called Morgan Stanley. What should I do? Well, we recommend you putting more money in our 7.6% bond fund and getting out of the risk and doing this and putting a smaller percentage of your assets in stocks. That's what they're getting. So, and of course the heat map. Let's take a look at. Oh, look at all the stuff in here. Again, our Microsoft 7%, Nvidia up 17%, Amazon up 8%, Google up 7.8%, Meta up 7%. So the big stocks, even our Walmart up double digits. What didn't do good? Our Lilly. Remember, we getting out of we cut a lot of exposure in medical because we wanted to try to limit it. I like to have the basket of medical stocks, but with this economy, we can't be that overweight. We're still, overweight in tech, social, health, and materials. Again, the oil companies we caught out of Conoco and like I said, is going to be lower. I think so for a while. Then, of course, like I said, here's our stocks. We told you last week what we're bought, and we did that. We're not hiding anything, so you could have got in, right at the time. Just a lot of times, we don't want to just sell. We want to try to, if anything, sell 2 buy 1 type of thing. So, Southern, our utility, because we always need energy, and we finally got back up there. And then Dollar General is going to be our, retail play with, along with Amazon and Walmart, and then Flutter is social, the #1 sports betting company in the world. They'll bet. I don't care what the economy is. People will bet. Maybe they shouldn't be betting, but they will. And Progress Software with file sharing is our other one. We had one software stock, Microsoft, forever, and I finally got another one that was good. So we're diversified. All 12 sectors we're good in. More defensive earnings. We start looking at, we got a lot of dividend stocks, and that's good. We're trying to, not make a killing. We're just trying to beat the S&P 500, and it's going to be tough. But I think we got the best companies in each sector. That's important. Other than that, have a good week. It's supposed to be a nice weekend, unless you're in a tornado alley or something else like that. I'll see you next week again. Hopefully it'll be more calmer. And have a good week. Talk to you later. Bye.